General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's do the chart work. Today's Monday, the 27th. Got Nasdaq on the M15. Opened up higher. Like ceasefire news and everything, but we respected this new day opening gap and got the buy side liquidity I have marked out for the weekly open. The market opened and kind of just crashed. Well, sold off because people take that crash word emotionally, but we sold off. Took a couple of days liquidity, but we didn't hit this weekly volume imbalance. Kept up near the top. The good signs of stock week. Alright, Nasdaq H1. So move origin is here. Completely filled the new week opening cap. Down on the daily. Got a daily order block here too, this weekly volume imbalance. So it's going to be interesting to see how we react there. No sign of smart money reversal yet. Continuation lower. SPX. This is that suspension block. It was kind of stuck inside. Came up to the top. We didn't get the high of it. This is EQ of it. Market opens, flush through EQ, the suspension block, and then come crash through Friday. Took that out. Kept up in the premium, sold off. Here he is on the H1. Just cap up in the sell-off. See the suspension block, volume imbalance, and the block in between. Both sides of Friday have this rep. We can sell side liquidity, stop hunt before price piles up. Let me just accumulating engineering liquidity here. Can't see another lower push. Maybe for Tuesday and reversal Wednesday, maybe. Daily. It's crazy how that volume imbalance is still getting respected. Still in the choppy range, but now we might as well clear out the lows from this perspective. This price here, just a bunch of wicks here. Do got a lot of confluence here too from the higher time frame. It's a higher time frame wick. Respond on daily. So got the overnight that had us up and just opened here a little wick and push down. Eat the tail day. Tail. Price rebalanced up candle wick. QQQ. A lot stronger on QQQ. Closed through previous week's low. Straight down close as well. Close below previous low. Let's drag us slower. And NVIDIA, this the dog. Crazy day. NVIDIA fell about 5%. I'm being concerned that it could potentially provide roughly a $250 billion financial backstop for OpenAI data center project. Micron also declined because NVIDIA is also or so heavily weighted that can make Nasdaq and MQ look much weaker than the average stock. It's the engagement. More towards the end of the day, look for a buy. Took partial here, closed out here, and this was a scratch. What did I do? Played a buy for the rebalance in the day. Did I follow the plan? Yes. If not, what caused it? I followed it. What did I do well? Manage risk. Didn't push too hard. The major moves I already missed. What will I do differently next time? Try to get there earlier. Note some thoughts that the film will play out. Yes. What did I learn about pattern narrative for myself? Figuring out the go-to system of execution. What will I watch for tomorrow? Consumer confidence comes out at 10. So it is week 5. We ain't expecting too much. We got Fed fund rate coming up, so that's the day we really want to see super big moves. But leading up to Fed fund rate, we could sell off. I've seen that a few times too. So just gotta stay on our toes. All right, that's that on that. Y'all have a good day. Peace.